TGIF, everybody. How's everyone doing? Hello, Sinatra, Alexander, Arena, how are you? Brock, Kevin, everyone doing okay? Yes. Okay. Very interesting action we had yesterday in the S&Ps. So yesterday when we were talking, I thought we could get up to about the 3,800 level and surpass my expectations. What a pretty classic. This might have been B, and we're in C right now. The close today is going to be pretty interesting. But classic of bear market rallies are very sharp, dramatic, but not long lasting. So, really it gave it up on the close and followed through back under this 3780 pivot on the week. No, we're not closed yet, but I have to say this looks like a pretty decisive candle. Don't you think? In fact, I believe, did we take out last week's highs? Yeah, 38. Yeah, we did on Tuesday. Yep. Okay. So key reversal. We had one here too and wasn't real long lasting. There was one that fooled me. I forgot where it was, but this looks pretty negative. I actually think that we have a shot for 3,400. I know it's premature, but look at what we're holding, the 50-day. So if we crack the 50-day, I'd expect a test of the 200-day. So 3,400, I think, is viable. Of course, there are support levels. This 36 level is going to be real important, right? It was. So we'll see. We get a flush under this, and I think 3,400 can happen. And yes, the Reddit traders are taking silver up to $1,000 an ounce. Very nice action today. Took out last week's highs. Gold's a completely different story. In fact, yesterday I was saying I thought gold might be able to rally towards this 1880 level, and we could still do that. It's basically this line up here. Extend it. So it's going to come in around 1885. It's interesting because the yen is U.S. dollar yen is very strong today. So we'll see. Usually you don't get this type of action. And, been talking about the yen for a few weeks now. It's did nothing wrong moving sideways, and pretty good day here. So we had the breakout here. That looks good. And kind of sideways in the euro. I'm thinking there might be a chance to sell the euro next week up here. So we'll take a look at that. Euro pounds, diverging again. Down here, you could see it. Above 30. But a negative week, I'll look at it next week. But the pound has really been stubborn, almost made a new high. I'll be looking at that next week for a possible short. Canada, though it's lower, had a pretty good week, along with the USD MEX, the risk aversion currencies, and Aussie, starting to get tails and wicks on rallies. So what kind of week did Aussie have? mid-range, but looks precarious to me up there. Yeah, I think the Reddit will have it at 1,000 by the end of next month. Getting a pop in the oil here. An up week considering. Hello, Richard. Considering risk aversion, crude's done nothing wrong yet. So something's going on there. It's, definitely resilient. Resilient is the word I would use. And just to keep in mind, the sale is still going. They extended it, right? Till the end of the month. Well, that's this weekend then, right? So for you guys that are procrastinators, I know I am. It's a sign of depression when you procrastinate. So overcome any depression you have by getting involved and not being a lone wolf sitting there by yourself in your little home office, except for when you have face, and collaborate with people in our members chat, and also at least sign up for, if you don't take this, the light, so you could get Blake's bias charts starting next week. He won't be going over them here in face. It'll be a different schedule where we're going to have a half an hour of analysis and then go right to the interview. So if you find Blake's going over the bias chart, and he'll be a little different. He'll be answering questions to from our members during that time.
That's right.
The schedule, we'll start at the same time. Well, the first half hour instead of the first hour will be analysis, and at the bottom of the hour, the interview will happen. So it's an hour instead of an hour and a half. That's a difference.
Yeah.
So you want to expound on that, bro?
Yeah, I mean, the reason why we started talking about it a couple of weeks ago is just we want to give people time to make preparations for the change in schedule, especially, for those of you that are used to listening to the bias chart analysis, and you're like, shoot, I need to be around for that. Just want to make sure that you had the appropriate time to make any personal changes to the schedule that you needed. So basically, in about 52 minutes from now, normally every day, we're going to start analysis on the bias chart, and then I'll be answering questions as we go. So for those of you that are ForexAnalytix subscribers, your face webinar is basically going to increase. The whole thing is probably going to increase by about 30 minutes, as we go into more detailed analysis.
Yeah, and you're going to have to log in.
Yes.
Again after phase, so There'll be a separate login for that webinar.
Yeah, we can't just kick out people. So you'll basically log off of Zoom and log back into a private broadcast. So yeah, Dale, thanks for bringing all that up. I appreciate it, because we need to talk about it before this weekend. We just figured let's just let this run to the end of the month, because it is gives everybody time to be involved, but more importantly, it's for us to have a clean start date at the end of the month, beginning of the new month. So so how are you, or TGIF, and can you believe it? It's already Friday. What a long week. It
feels like it was Friday Wednesday.
Huh?
But yeah, it felt like Friday a few days ago. But yeah, I mean, tip of the hat to Grega about a pop in the S&Ps for, there could be a B wave and then a C following. I know that they really jammed shorts yesterday. I actually shorted NASDAQ on that pop. I covered it at the close, so left something
Nice.
at the table. But this is going to be an important close because it's both a weekly and a monthly close. So pretty negative. I mean, I showed that weekly candle, Blake. It's not anything I would buy
Oh,
on the
for the S&P.
indexes. Yeah.
Yeah, I mean, this is here. Actually, you know what? I'm going to take this chart right here, and I'm going to go right here, and
Yeah,
I'm
remember
going.
yesterday I said we could get to 3,800, and I thought I was being aggressive, and you said, I don't think I'd get that high. But yeah,
Yeah,
3,830, that was really a squeeze.
it
But it
really
gave it
was.
all up, gave it all
Well,
up.
and we've given it all up, and we've almost have an outside week, depending on where we close today. Now, you just saw this headline, right? It's not a headline that none of us actually wanted to hear. First of all, this is the J&J. This is the headline that just came on Bloomberg.
Oh, no wonder. Yeah.
Yeah, the effective rate of the J&J trial, we had a lot of optimism, and I think the market was hoping for more. But the problem is these variants, like the South African variant that has has made its way into the U.S. And what's scary about that is the two people that have tested
South
positive for this,
Carolina. Yeah, they weren't even in South Africa, bro, and
no,
they
they
don't
weren't
even know
traveling.
each other.
No,
Yeah.
no. So
So
that means
it's in the community, right?
yeah, it's here. So that's a problem, right?
Oh God, I'm so sick of this.
We all are. I was, I was having this discussion with my poor teenage son, and he's like, "This is just ruining my teenage years," and I'm like, "It is," and it's. I mean, we're all suffering. It's not,
Yeah. Well,
no
yeah,
one's suffering.
those are carefree days. They were for me.
Yeah, especially
Now,
for
the
teenagers,
kids
right?
have the weight of the world on their shoulders now. They're not
It's
worried about their health, but they're worried about spreading it.
yeah. I mean, and it's nuts. Anyway, so we have this COVID situation, which is going to be. It's probably just going to be for us a slug, just kind of like the reopening is going to be kind of slothy, and it's going to be messy, and we're going to have fits and starts. And I think everybody had high hopes, or has high hopes right now, that we're going to have some vaccine and we're going to be back to normal by the end of summer. But I don't know if that's really going to be the case. And so I personally, I've always felt this about the vaccine, is that we're going to be dealing with, more of COVID on a yearly basis, and we're just going to have therapeutics. It's going to be like pneumonia. You get COVID, hopefully you don't get too bad of a case, and you get some, a shot and, some sort of therapeutic, and hopefully you can shake it off. And I'm hoping I'm hoping that's not the case. I just I've always felt that would be the situation, but we'll see. I mean, we'll see what happens. So that headline's obviously weighing a little bit on the markets right now. You can see the markets came under a little bit of pressure. I'm going to read something really quick to you guys. And my office, and just so you guys know, this is the ForexAnalytix chat room. And for those of you that aren't in the ForexAnalytix community, once you join ForexAnalytix, it's right here. You click on this little link up here. It says join the chat room, right? Go to the chat room. This is the chat room. But the reason why I'm pulling this up is I'm going to pull this. I'm going to pull up this headline, or not this headline. This written piece that comes from an analyst that my office subscribes to. Now, typically, I don't share what our trading office subscribes to, because they subscribe to it. I got to respect that they do. But it was really well written, and it's kind of goes in hand. And I'm not telling you who it is, because again, this is just, I wanted to share his words. This is more eloquent than what I tweeted yesterday, but basically what I tweeted, I was talking to my wife, and she's like, gosh, last year they just tore down the political system. This year they're going to tear down the markets. And I'm like, Yeah, it really feels that way, that, it's that division of wealth, um and the Robin Hooders, and, it's, the people, basically fighting back against the man, if you will, the quote unquote the man. And so this was written by this analyst this morning, and I just wanted to read it to you guys, and I'm sure you guys are probably reading it now, but if it's too small on your screen, I'm going to read it for you. It says, the toxic combination of perpetual massive stimulus, the gamification of markets, the entertainification of trading, and new technological tools, no commission trading, fractional shares, social media, etc., that eliminate guardrails while facilitating the rapid propagation of misinformation, made situations like GameStop inevitable. GameStop may be the culmination of ridiculousness, but this has been a process steadily building for some time. In addition, an attitude of casual nihilism that seems to permeate so many facets of society, including politics and now financial markets, whereby disaffection and indigenacy fuel feelings of rage and desire to destroy. It's very much at play too. The 90s had some of these elements, but not all of them. With the tech bubble fueled by genuine but clearly misguided euphoria, this latest phase of market craziness isn't too much based on optimism as it is cynicism. Unlike in the 90s, most of the people participating in the madness now know it's a joke. They just don't care. And that's really well said. I mean, because, people look back and they go, we go, wow, this is just like the .com bubble. And it is, but there's a lot of .com people now that are just playing this, basically for like, I don't give a crap. And that kind of attitude is fueling this euphoria. And it's scary, Dale. Are you still there? It's scary. I'm genuinely frightened about the framework of the markets at this moment. And that's, not to say that we won't, that we're going to go straight down. We could go straight up. We could go to, S&P could go to 10,000 and then come crashing down. Or we could go, to 1,000 in the S&P and come all the way back. I just think it's getting a little scary. What are your thoughts there?
Yeah, I think that the symptom is really showing up, and I understand why people are looking at crypto, because of it. They consider it a hedge, but just this is what happens when the Fed stays easy forever. Malinvestment. Steve has talked about it forever, and you're right. Just
look at this, Dale.
Yeah,
this is Dogecoin.
Dogecoin. Wow.
Literally,
Wow.
That's a 15-minute chart. So here's a daily chart.
Jeez.
So surely the fundamentals of Dogecoin changed, right?
Yeah, 0.004%, and now it's up 1,000% maybe? I don't know. I'm just guessing.
It's just unbelievable
1,000%.
What's happening here.
Yeah, so this kind of risk taking is so it just looks, it's .com all over it.
It's just so surreal to me, Blake, that never believed. We were always kind of trained that retail was to be faded, and it was the commercials and the big money that managed and ran the markets. And for me to think that it's power to the people, I really don't think it's just retail. It's hard for me to believe they have that much buying power to do what's happened.
Yeah, I agree with that. It's definitely, I know guys that went in and bought a ton of silver yesterday.
Guys, just a comment on this. Good morning, first of all.
Good morning, Steve.
Now, two comments. One, it's what Blake was about to say, which is, yes, there are some commercials that have smelled blood in the ocean as a shark does and have been riding, in essence, these commercial trends. So that's one aspect of the issue. But I remind you that many of those short-term retail speculators, what they do, the vast majority of them, is that they trade in options. And in essence, options are hugely leveraged positions.
Hey, Steve, while you're talking, I'm going to start analysis just so it.
That's the comment they had in this.
Yeah, you guys, I'm listening to you. I'm just going to be writing down numbers. Most people have, know what I'm going to say anyway when I'm going through this analysis. So go ahead, Steve. But yeah, most of them buy options, which I have to say I agree, because the guys that I know bought a crap ton of silver options yesterday. I mean, I'm talking boatloads, but go ahead, continue on.
Yeah, that was my comment. So in essence,
what does that do to the market then? What is
through the use of options? It's like, with little money, it's like you're buying a lot of stocks for a short-term period, but still you're buying a lot of stocks.
Right. And so what does that force the market to do when those options?
Yeah, Greeks should know that. They talk about gamma.
Yeah, exactly.
Steve, what is gamma? I know gamma rays aren't really good for you.
It's the rate of change of delta, basically.
Exactly. It's the rate of change. It's the first derivative of delta. Exactly.
Delta is how much the option moves by $1 move in the price, and then gamma is how much the delta moves by $1 move in the price. But anyway,
exactly.
Can you guys explain that to the listeners, what that means when a bunch of options are being bought on silver, for example? What does that do to price?
Well, that's the thing. They buy the options from somewhere. So the market maker who sells the options then has exposure, and he or she will need to cover some part of it, which is called the delta. So you sell, say, I don't know, 1 million worth of options. You're not going to cover the whole thing, but you cover a little bit of it. There's a calculation on it, and you have to cover your delta. So to cover the delta, if they're sold calls, for example, in silver, they have to buy spot
silver.
They buy a little bit.
Yeah.
And then and that's how it happens. And the more options get written, the more they need to hedge, etc., etc.
And so you understand that when that unravels, it follows the opposite route, but really accelerated.
Yeah, but how does it really unravel when options, like let's say I've bought silver. I'm buying silver options that expire next week, and let's say and silver is a good example just because this is what the Wall Street bets were targeting yesterday. They were targeting SLV, right? And we talked about it. We talked about, hey, and then it was our chart of the day with an inverted head and shoulder pattern, clear breakout. It's moved, and now let's say everybody wants to take their profits now, and the options expire next week sometime. What happens now if they all turn around and sell it? You guys, I'm asking, and I'm continuing on with analysis here. What do you think?
The exact opposite has to happen.
Yeah.
Yeah.
Okay. So we have Gensler now, and Charlie Gasparino sent me an article. He wrote about it, and Gensler used to be, he was a Goldman Sachs guy. All right, so he was like a banker, but he's gone through some type of evolution where he started to really believe a lot of the things and adopt philosophy and policy of Elizabeth Warren. Okay, so that's not exactly Wild West kind of guy, and Charlie's interpretation is Wall Street's luck is over with Gensler coming in, and now with all this stuff going on, he's going to have plenty of reason to clamp down. So I think that may be the outcome of this. Keep your eye on the SEC, the new SEC chairman. The other one who just resigned, I mean, I don't even know who it was. I mean, did you ever hear from the SEC chairman? You know, when Musk was saying we had funding,
No,
and
never.
you know, I don't know who he was, Blake.
Right.
But this guy Gensler, who ran the CFTC, who knows derivatives, he's going to crack down on this stuff.
Yeah, and it's
What
Sorry for laughing, but
you
I've
can't?
heard. You know what you just reminded me. Unfortunately, the people that were saying that Powell is a different guy. He's a
Oh,
market
okay.
guy. He understands. He's going to come in and he's going to fix
Taper.
the pathological problems of monetary policy. And like 3 months after his tenure began, guess what? Powell magically became,
Kumbaya.
yeah,
Was
exactly.
holding hands with Bernanke and Yellen.
And
Yeah.
obviously,
The only
when
difference is the Biden administration, who is, I guess you would say, at least what he's saying, not as much for the elite, but to help the poor. And that's why he's sending money and stuff. That it's possible that, with what's going on here in America, that there's a lot of support for, taking on the ultra wealthy and rich. And, that's, a little different than what we've had for a while.
In my opinion, Dale, and with all the love I have for you, and you know that, you're too old to still believe in socialism. Whenever you hear a government say that it is for the poor, make sure that it is the government that's going to make the poor poorer. For example, raising the minimum wage to $15, does that really help the poor?
No, because people can't afford to hire them in this environment.
No, it's not only that. If your productivity is worth $10, guess who is going to hire you for $15? Answer: nobody. Why do you think McDonald's, last time I came in the US 1.5 years ago, I saw something that isn't the case here or in other countries, that you have a lot less staff, for example, in fast foods, and you've now automated almost everything. Why do you think that this happened? Simply because the minimum wage of $7.25,
that's right,
priced out of the market.
Yeah.
Some of them because automating their jobs became more profitable. Why do you think that you can't find an actual person speaking to you in customer service anymore and you just get robots?
Yeah.
Because for the exact same reason. Now, imagine one of the few positives of inflation is that over time, it mitigates the damage of the minimum wage by making it less important. You know what I mean? I mean, when, for example, $7.25 was first established as a minimum wage, it was much worse for cheap labor than it is after $7.25 are actually worth less. Now, imagine raising that to $15. Imagine how many people are going to lose their jobs and become legally unemployable because of that. Now, the fun part is that politics is the art of actually making the things that make you more popular to the vast majority of people, which are people that don't understand what you're doing, which means the following. The few people that are actually going to get a raise to $15 just because their productivity is at least worth that much are going to be like, oh, this is great. Thank God. I mean, they implemented this policy and now I'm getting what I deserve. The thousands and thousands of people that are going to remain unemployed because of the $15 of minimum wage don't have the ability to figure out that they're actually still unemployed because of that. So you gain the sympathy of the people that benefited from that, but the people that actually got hurt from that don't understand that you actually hurt them to vote against you.
Hey, Steve, I'm going to have to interrupt for just a moment. I'm sorry. I just wanted to go ahead and there's a couple key technical developments I need to talk about today.
Absolutely, mate.
In the currency market before I take off here. So I just want to.
Plus, we have data in about 20 seconds, Canadian and US. So might
core PCE, personal income, US consumption, and Canadian GDP.
Yeah, and the Canadian GDP might be really important because you'll notice that we have a double top brewing, and
Expectations are for 0.4, by the way, in the Canadian GDP.
Oh, 0.7. So that's stronger.
Yeah, quite stronger than expected.
yeah, the market probably was expecting that because you can see it's been rallying the whole time. Canada is pretty notorious for leaking their data.
Yeah.
Yeah.
I mean, you'll see the moves that play out in the currency market well before it's actually released. So
I'm in this industry now for 13 years, and it's
PCE
one of the
here?
first things I remember hearing that Canadian data gets leaked, and yeah.
Oh, here's all then. It's all out. Oh, it's
Yeah.
get released here. PCE. This is Bloomberg over here. So, yeah, I mean,
It's all that Crown Royal up
it's
there.
I'm just looking through personal spending. I mean, yeah, I mean, hey, inflation is coming up. Inflation.
Look at raw materials, Blake.
Yeah, I mean, look, guys, we are going to have an inflation problem. And so the Fed is going to have an inflation problem. So you have to think about how that translates to monetary policy. I actually had a conversation with Chris Weston from Pepperstone Securities yesterday about this. And we actually, we recorded the video, and you guys will be receiving it via email over the weekend if you are on our mailing list with ForexAnalytix. So you might want to make sure that you're signed up at least for our newsletter if you're not already a client of ForexAnalytix. So just want to let you know that. Now, there are a couple of key developments in the currency market I need to talk about really fast, guys. So let me just do that. One of them is with the Aussie dollar. So the Aussie, we had a really big move yesterday, and a false breakdown, if you will. And you can see that the Aussie pushed below what I was looking at as really key support at 76.35. We pushed below it and bounced, and then we created a hammer, and we're up a little bit today. This is, and you can see it's really just kind of channel support, right? If for all intents and purposes. And let me get rid of this blue line here. Okay, let's get rid of that.
Hard to short Aussie with what the metals are doing.
Yeah, and then you got to think about what the metals are doing and what risk appetite's doing. Everything else.
I know.
There's a lot to take into consideration. One thing I need to say about the Aussie, though, it's really not participating as much as you would expect. This is right here. You can just see from this low to the high, and the low being back in November and to the recent highs. The 24% retracement comes in right here at 76.30 as well. So I'm going to write down 76.30 again today, because if we close below it, and I know we might still be above 76 cents. That's going to be pretty bearish, and that's only 35 pips away. So I just want you guys to think about that as we head into this trading session. Obviously resistance, we'll have to figure out what that's at, which is right here at the 618, which is 77 cents, which is not too far away from where we're at. So the dollar yen is breaking out. If you guys didn't see it, we are breaking out above this multi-month daily trend line. But if we don't close above, well, we should close above this now, but if we don't close above, in my opinion, 104.40, which you guys know we've been talking about, I think we've been writing down 104.40 for, I don't know how many days we've been writing it down, or how many weeks. That's going to be support for today. And it's important because we are going to flip bullish for today unless we close back below 104.40. We close back below that, I think you got to be very, very careful with longs. Dollar index, we're still in a range at just wanted to write that down. 90 to 91.
What a weak response for risk off.
Well, was it really risk off?
Oh,
I
yeah,
mean,
it depends.
let's talk about that.
Well,
for
I
a
mean,
second.
you know,
We sold off to channel support and we bounced back. So
Yeah.
until the market is really convinced that we've got, like, we break below 3,700, I think you're going to see a change in tone in the dollar. People will start, respecting the dollar a little bit more, but we have to get below the support. And it's obviously not, it wasn't yesterday.
I'm
Maybe
just saying so far it's been pretty muted.
Yeah. And speaking of which, so let's just write that down. 3,700. That is critical support. And for right now, we have to stay bullish while we're above it because we respected it yesterday. Resistance will be 38 and a quarter, and then 38.25, then 38.70. Okay. All right, guys. I'm going to pass things. Oh, here you go, Stelia. Sorry. I'm going to pass it over to you all. I just want to say thank you all for your support. And for those of you that are, part of the ForexAnalytix community, I appreciate you being part of it. And thank you guys for listening in every day. Even though we're going to be doing the bias chart, for the for ForexAnalytix subscribers, it's really because I need to spend time going through the analysis. It's just giving you the numbers. If you don't have a good understanding of why I'm pulling those numbers out, then what good is that to you? I mean, yes, you get the information, but really understanding why that's such an important support or resistance is really important, because at some point I won't be around. At some point Dale won't be around. At some point Steve, Stelios, we won't be. And for you to have the knowledge on how you come up with that data yourself is, in my opinion, pretty important. So all right, guys, have a great weekend. TGIF.
Too, Blake.
Thank
Thanks,
you,
guys.
Blake. Thank you. So TGIF, everybody. It's been
Hey, Stel.
been a crazy week. It's like everybody's talking about 3 or 4 stocks. But I think the bottom line is that the markets have become a bit of a joke in certain ways. FX actually is very controlled, volatility in FX is still relatively low, but equities and everything else.
Yeah, you know why they can't do this in FX? Because it's too deep.
Trillions and trillions of
it's too deep. Yeah.
But
So
yeah, exactly. And so the question now, I guess the game is trying to figure out where everybody's going to go next. What's the next one? No, Dogecoin, let's go there. What's the next one? Oh, XYZ, let's go there. That for me is just gambling and just trying to look for a quick profit somewhere where there is no reason. And that's why I'm not participating in these things. What I am participating in, though,
the fun part, Stelio, sorry to interrupt you, is that they've started hinting immediately that they're going to in essence intervene somehow to reduce this type of a gambling behavior, which is really funny because of course they don't want to admit that the problem itself is that they've created an environment that promotes this type of gambling behavior. They just want to find ways to just limit it. Instead of fixing the problem once again, they just want to fix one of the manifestations of the problem.
How would you fix the problem? Have the Fed start reducing its balance sheet?
Listen, the good thing is that you can fix all the problems we've been talking about with doing the same things. The problem with that is that before you get the huge benefits of actually normalizing things, you have to go through the pain that is going to be huge. And why is it going to be huge? Because when we could have actually taken the pain, and the pain would have been a lot less, as always, politicians chose the method of postponing the pain by making it more in the future than having to explain to the electorate why we have to go through a transition period that things are not going to be so rosy.
Yeah. And you've been saying this for months and years, actually, Stephen. You're right. Every year that passes,
and
it's
another
worse.
thing, I disagree with you. Disagree. I mean, not actually
How
disagree.
dare you?
Yeah, is that the markets haven't become now a joke. It's just now becoming more apparent how much of a joke they've become.
Yes. Anyway, this is all everybody's talking about last week. I was going to say, I'm not participating in this, but what I am participating in is silver. And if people have been listening to this webinar for a while now, they will remember that I always said I want to see a weekly close above 26.50 to get long. But yesterday morning, when I heard about these, Wall Street bets guys and Reddit guys and all that saying, we're going to go after
silver.
we're going to go SLV. I wrote it on chat and I said, right, I'm going long now. And so I got some, and it's going bananas again today. So I like that a lot. I think this breakout is the real thing. Could we go lower again? Of course we could. I can't say it's 100%, but I think this is the push that we needed. And what I'm going to be doing is I'm going to be adding now. So I'm going to wait to see price action. And
it's going to be funny, Stelio, if actually this, trend from retail actually manages to do what I was saying, that unfortunately it's unlikely for it to happen, to see a real divergence between gold and silver. We were talking about the technical divergence, the fact that silver had broken out from its channel, back tested it, which, as long as this channel was holding, technically speaking, I mean, it was still bullish, while gold, on the other hand, hadn't broken up. I mean, it's going to be really funny if they actually manage to make this divergence play out, just because of whatever maniac behavior is going to come through silver now.
I think it was always going to break out eventually. The question is, would we get a dip first? What was going to be the trigger? And this seems to have been the trigger. And so I'm going to watch price action, and once this first move higher, I mean, I got long, thankfully, relatively early yesterday. After this first leg goes up, and and it seems to be running out of steam, when we get a nice pullback or something in that zone you're showing, I think we might
big resistance here, 28, 10.
We're going to see resistance there, and on any dips and retests below, I'm going to get more, and just going to keep doing that. So that's what I'm playing now.
One thing is for sure, opposite from the idiots that are buying companies like GameStop.
BlackBerry. BlackBerry even.
GameStop.
You still have your BlackBerry?
Worst case scenario, I never liked Blackberries personally. I never owned one. I'm pretty sure that Stelios did, because back then in the banking industry,
only because the bank gave it to me.
Yeah, exactly.
Back in the banking,
exactly. Back in the banking industry, everybody had Blackberries, because it was like a very safe device, and banks were giving it to all people. Dimitris had, of course, as you understand, Stelios as well, a few of them. But oppositely, then the idiots that are buying GameStop, that some of them, I'm pretty sure that they're never going to cash out, thinking that it's like going to the moon and they're going to be left holding the bag. Worst case scenario, Stelio, even if you're only buying here in the short term, holding silver is definitely going to make you money. Worst case scenario in the medium to long term. So
that's my view, and you know it.
Yeah,
my last trade took 18 months to manifest itself. But
so worst case scenario, you will just have to wait a little bit more.
And if we dip again, I'm fine with that. I'll add more below.
Average, average scaling, average more, average in.
Cover silver longs in 2028, says Sansi. Yeah, maybe. Anyway, it's a crazy market, and equities is obviously the talk of the town at the moment, but very, very difficult to participate in these things, because for me, I don't see the value. GameStop and all that. Where's the value in it? It's just a random walk at the moment. So
listen, I'm pretty sure that the people that were the fans that were short GameStop knew exactly what they were doing, because very well, Stelio, that fans don't go short stocks unless they've done a lot of due diligence, because oppositely from being long, being short has unlimited loss potential, as they found out. So
well, they were short looking for BKs.
So I'm pretty sure, Dale, that at the end of the day, they're going to prove that they had every reason to want to be short GameStop.
Mhm.
There is a good chance that at some point it's going to go bankrupt. But you know how bubbles are. I mean,
Oh, yeah.
first
gone.
they're going to squeeze them out.
Yeah.
And after they get squeezed out and lose tons of money, and I don't know if some of them will even fail due to that, pretty sure that the people that are buying it and have the might have the idea that it's like a long-term investment, they're going to go bankrupt as well.
Yeah. Steve, why don't you show the gold silver ratio making new lows here? That was
Yeah,
a good
absolutely.
call by you.
Here
that
it is.
It was going to continue, a continuation move.
Yeah, we were looking at it specifically. We were looking at this channel, which still holds, as you see.
Okay.
I thought back then, last time we checked it, I thought that there is a chance that we're going to get this type of a corrective formation, like this type of a corrective formation. But the
That's what
fact
I
that
thought.
but the fact that we're about to hit new lows without even producing a higher high is a very, very bearish development. In any
Except
case,
for one thing I will say is that we're not confirming these new lows
from
on this
RSI
time frame. Yeah. That's the
yeah.
only, if you're looking for something to rationalize, that's it.
From an Elliott wave perspective, perhaps this will prove to be some type of a flat, meaning we're going to get a lower low.
Yeah.
We're going to get a higher high.
And then
and then again. Lower.
Okay.
Something like this. So keep in mind that is a very likely development of such a correction. These also expanded flats, as they're called, they're the most devious and vicious corrective patterns as well, because what they usually do is first they get short, or the opposite if we're talking about an uptrend. They're getting short or long people at the wrong possible time, then they wipe them out, then they get the other type of crowd, long or short, if we're talking about an uptrend, at the wrong possible time, thinking that it has bottomed, right, because it's producing a higher high, and then they wipe those people as well, and then without many market participants riding any of the two directions, they continue.
Hey, Steve, what's the total number of years of trading experience of our crew? Ballpark.
150 years roughly.
Okay, so guys, there are a lot of unprecedented things happening, even for all the years that we've been in the market. You guys know I've been in them for about a century. So
century and a half.
Yeah, so it's never been more important, especially if, say, you've been trading a year or two, to be around seasoned guys that have lived through adversity, maybe have gone through where they've blown an account, and it's never been more important to be surrounded by experienced, seasoned traders now. So it's a one mistake business, and those guys are going to point it out to you if you start talking about some of the things you're doing. It really could be life changing for your trading career to be surrounded by Steve and Stell and Greg and Blake.
Speaking of one mistake business, I think the first thing we're trying to teach people is that they should never treat it like a one mistake business. I mean, if you're trading in a way that it can be a one mistake business, then you're doing it wrong, and you're definitely getting out of business.
Right.
There's no question about that.
Yeah. So anyway, experience has never been more important with what's going on, in my opinion. So
just a comment. We have our friend here, GRK. I don't know if I read your name right. GME buyers aren't holding forever. It is to create a gamma squeeze. I understand. So I'm wrong about that. Listen, I don't disagree with what you say, but you're making a mistake, and I'll explain to you what the mistake is. You're making the following mistake here, mate. Yes, all of them, I agree with you, entered this market thinking, I remind you, the real context of this chart was this. This was in a real I mean, look at where GME was trading for so long, right?
Yeah.
So yes, the initial concept was that they're going to enter to make a quick buck. The mistake you're making is the following. You think that the people that actually bought just look at this. Just look at this. You think that the people that bought somewhere here didn't also believe that they're going to make a quick buck? What do you think happened to the people that bought at 280, thinking that they can get rid of it at, let's say, 400, or the people that bought at 400 thinking, or whatever, you know what I mean? And when they saw they had a lot of paper gains, they said to themselves, because most of them are really uneducated and inexperienced investors, they're like, oh my God, I'm making $500,000. You know something? I'm going to make it $1 million by tomorrow. And their paper profits of, let's say, $500,000 from trading like 20,000 became negative in a few hours. You know what I mean? So yeah, I don't disagree with you. Some of them were lucky enough and they made a lot of money in very little time. But believe me, there were a lot of them that lost a lot of money, because they're actually, the vast majority of them are actually people that don't know what they're doing. They just read on it, they see the chart and they're like, oh my God, this is an easy way to make money in half a day. Because they're looking at this chart and they're like, oh, I can buy it at 400 and by tomorrow it might be at 800. And they really believe it because they're like, wait a second, it was at $3 and it went to 400. Why can't it go from 400 to 800? And, in their mind, it makes sense, right?
I think the real problem is it blows out reality.
Yeah,
and maybe that's why.
Because they're inexperienced, you know what happens? Because they're inexperienced, many of them, they go deep into negative, and you know what they start telling themselves? They don't want to realize the losses, and what they tell themselves is the following: I'm going to add here because this is just a correction, like what I've been hearing from the Bitcoin guys, that you just need to hodl, and sharp corrections are part of the game. So then they're buying more lower. For example, they initially bought at 400 thinking it's going to go to 500. It never reached 500, and it went to 300, and they're like, I'm going to buy a little bit more here. And then it went to 200, and they're like, I'm going to buy a little bit more here. And then at some point it went down within the same day to 100, and they couldn't afford it anymore, and they lost all that money. And now it might go again, let's say, to 800 due to speculation. Let's assume. I doubt it, but let's assume. I think this bubble has probably already popped.
Yeah,
but they already lost their money.
Yeah, but rather than the trade, when people see these kind of returns, I remember saying that hedge fund managers do cartwheels doing 35%, 40% on their money a year. And then when you start seeing all these outside gains that are happening in crypto and in options on these short squeezes, it's like, this isn't normally how you grind out a living in the markets as a trader. You won't find any of these guys in Schwager's books.
Yeah.
They did it a different way. So that's what I'm saying. It changes the reality.
The people that have made money like this and actually held to this money are literally counted in the fingers of two hands, something like that. You know what I mean? The vast majority of them, two of the following things can happen to them. One, they believe they're like geniuses, and they're trying to pull off the same trick 2-3 more times, and they end up losing everything because they want to do it at a bigger scale, because now they start having dreams about Lamborghinis and boats and houses, so on and so forth. Or they just never realize any of the gains, and what seems to be like an amazing paper profit never becomes reality. Now, having to do with your comment, who
Dale
wrote about it? No. somebody wrote that they can't go in essence in the negative because they're just buying call options. So you know what you risk in advance. I just read your comment. They can actually lose even more money for the reason I told you, that because many of them are inexperienced. And what happens is when the price goes against them, they want to average in. They want a martingale. So they start buying more call options at different price, right, to bring the cost average down, but they don't realize that the same kind of squeeze they created to the upside, the exact same violent move to the upside can also happen to the downside. So they end up losing a lot more money than they initially, wanted to actually, quote unquote, invest in it. Somebody's asking about Palladium. We already showed, gold and silver. Here is Palladium. Still in this long-term consolidation, so nothing to say here. Platinum
Yes, Humphrey.
Platinum still holding this formation. Here is copper. Copper on a daily closing basis, it actually has been holding this neckline for the head and shoulders formation. So, I think it's going to be a very bearish development if we break through it. But, we first need to do that, right? Let me see. What else? What other questions do we have? Anything you want to check? By the way, Greg talked about it yesterday. I just wanted to show this. USD yen is actually breaking higher. First of all, has already broken higher from one formation. Look, the descending wedge here in blue. And so far, it's not breaking out, but it is threatening a breakout from the larger formation. Look the triangle here in red. Here's the trend line resistance. Here's the trend line support. So with a lot of skepticism, and you know why I'm extremely skeptical about USD yen, because of its recent history, which is just a history of choppiness, USD yen is actually trying to do something. Now, what points in the same direction is, and now I want to bring the 4-hour chart here because I was monitoring that since yesterday closely, but at some point I mentioned to Grega, but I didn't show the chart, is this. These are the treasuries. This is a 4-hour chart of the treasuries. Look at this rebound, Dale, right?
Yeah.
Nice pennant, nice divergence, right?
Yeah.
Nice breakdown from there.
Yeah.
So to be fair, in the short-term chart, the correction in treasuries, because I still think that this move lower is corrective because it has all the corrective characteristics. I mean, compare the legs higher in the treasuries, right? Look at this.
Mm-hmm.
With this type of move that we have lower. I mean, they have nothing in common because, in my opinion, this is corrective. Irrespective of that, this corrective move still seems to be ongoing.
Yeah.
And having
one more low, it looks like, and the 10-year held 1% and started to pop.
Yeah. So
looking
at the short-term picture here in the treasuries, and at the same time looking at the development in USD yen, it looks like this development might actually technically produce some follow-through. Now, how much of a follow-through? I would be rather conservative with upside targets, but 1,650 is definitely an area of interest, and we're still like 200 pips away from that, right? 200 pips for this USD yen, and I say this USD yen because if we were talking about the USD yen we had in hand between the end of 2011 and the summer of 2015, even the way down then, I mean, so if we're talking about the USD yen we had from like end of 2011 to like end of 2016, I would tell you 2,000 pips is not really much to talk about. But having to do with the USD yen we've had the recent years, 200 pips of upside is not bad at all. So it looks to me like we might actually get to see that. So that brings us to a fast look at some of the yen pairs, because due to this development, I think they produce some interest. The first of which I wanted to show is pound yen, because look at how pound yen is actually breaking through this major confluence of multiple resistances. I think this is a very, very, very interesting technical development if we close the day and the week above it, because it's still early on the day. So, let's wait for the close of the day. But this seems like a very interesting possible development here. Let's have a look at euro yen. Here's euro yen. So euro yen found support in this previous area of resistance, and it's attacking once again this 127.50. I think this time we might actually break higher. We might aim for the 61.8 of the whole move lower, which is at 128.70. Have a look at Aussie yen and Kiwi yen. By the way, speaking of the Aussie USD on a daily closing basis never broke down from this triangle. Keep that in mind. We were definitely trading comfortably below it yesterday, but at the end of the day, we held it. So here is Aussie yen, again approaching this channel's resistance, also horizontal resistance area. And here's Kiwi yen, which, clearly the formation was not that. Can once again attack the highs of this wedge, question mark. It has to, we have to see what it's going to be. And here is CAD yen. CAD yen, I talked about CAD yen multiple times last week. Here it is. Because guess what? CAD yen once again testing this. You can see the importance of this 82 area, right?
Yes.
So, attacking 82 once again. Let's see, can we get rejected once again? But clearly, if we break through cleanly 82, I think that's going to be a very, very important development. So I think a breakthrough 82 really opens the door for a move higher within the context of this channel. But even within the context of this channel, we have comfortably 400 pips of upside in the CAD yen. So 82, a major, major pivot area, above which I think you should definitely not be short. Early in the day, but made 100 ADR, and euro yen made 148% of ADR. No wonder Americans are counter trend traders. Yeah, John, that makes sense what you're saying. Yes, although I remind you that when you have genuine breakouts, ADR tends to expand. So in the short term, you might have quote unquote extreme or big readings in ADR, but with the benefit of hindsight, sometimes if you move forward a few days, you might realize that the expansion of ADR was not temporary and to be faded, but was actually more of a signal. So keep that in mind. That's why I've said many, many times that amateur traders, I'm not implying that you're an amateur trader, I'm now just giving an example to explain what I want to say. What they do is that they tend to become very much attached to specific indicators, and they don't really know how to interpret them in more than one ways, right? So yes, an expanded ADR in the short term might show that it's a good idea if you're a short-term trader to fade it, but at the same time, if it keeps being elevated for a few days, it might be showing a shift from being range bound to a start of trend once again, right? So keep that in mind. That's important. And it's a different way to look at potential big ADR readings if they start persisting for a few days. So if the USD yen genuinely starts breaking out from here, then you might see all these pairs trending strongly to the upside. And since ADR is backward looking, having to do in essence with volatility, for a few days it will still keep giving you messages that you're overdone, while you might not be overdone. You might just be at the beginning of a new type of trend for a pair, for a stock, or for whatever. You know what I mean?
Yep.
Anyhow, that's it, I think, for today, Dale. I'm assuming we have no guest, right?
No, you were the guest.
Because I heard no guitars playing, or
you were the guest. Anyway, I want to thank everyone who hangs out with us during the week, and we're trying to add value to what you're trying to accomplish. Hope we did
also,
that.
Dale, literally, and there is no more postponement for sure. The offer stands for less than 48 hours more. Less than 2 hours more, because Monday morning European hours,
Comes
the
off.
prices will go back to normal, and the new era for face will also begin. So people have something like 2.5 days left to take advantage of the offer with all that it has to give. Also, a very fast update. I know
Okay.
I told you last week that we will have ready the live squawk audio.
Cool.
Yeah. We had a few issues we wanted to work out. I'm happy to announce that everything is now ready. So we're uploading it on our test server. We're going to test it thoroughly throughout the weekend. And 99% Monday morning, with the change of prices, you will also have, for ForexAnalytix subscribers, the audio part of the live squawk, which all of you, previous members or older members, new members, will have the ability to test for 10 days for free. So you will have a 10-day trial for the live squawk, and then if you decide that you wanna that you like it and it adds value to you, you can actually subscribe to that as well and get it at a discount in comparison to what you would get it if you just went to live squawk and you get it through your platform. That's it, Dale.
And remember, everyone, don't just count your option trades, count your blessings, and be careful out there, everyone. And just don't change what's working for you because of what you see everyone else doing. Okay, it's tempting to do it and just throw caution to the wind. You don't have to reinvent yourself if you're doing okay in the markets. All right. So have a great weekend, everybody.
Have a
You're
great
welcome.
weekend.
Yeah, have a great weekend, Steve, and we'll see you for Face 2.0 on Monday. I have a new nickname for it, Steve. What are we calling Face 2.0? Go ahead.
I really don't remember what you said, but I remember it was really funny.
Okay, it's ForexAnalytix compressed experience.
Yeah.
We're just going to compress everything for you guys. And on a chart, when you have compression, it's good because it means that there's a big move coming. So
and
right.
you know how blunt and honest I'm always,
Yeah.
right?
Yeah.
Listen, one of the reasons we're reducing face is because obviously we want more people to subscribe, right?
Yeah.
We put so much effort. We really want to be making some money to be worth our time, but we really also want to devote more time to answer questions and go through the second part of face. Is not going to really have a specific time expiration, meaning, as long as members want to ask things or talk about things, we will have all the freedom, to do so, which is a good thing because we want to add even more value to our subscribers. And keep in mind that even by being a light subscriber, you get access to all the webinar for clients, which is an amazing value proposition, right?
Yeah.
Because it's like $19.
Yeah.
You don't
Yeah,
get
yeah,
everything, but you still get so many things for those $19. So if you can't afford the full subscription, I'm pretty sure you can afford that one.
Okay, Steve. So have a great weekend, everyone. Can you close the room? I don't think I have controls
Absolutely.
for it. So
Have a
all
great
right.
weekend.
You too,
Enjoy.
Steve. See you, everyone.